Scott Bauer, the CEO of Prosper Trading Academy, gets our day going for us, and always happy to have you on the show.
Always great to be here.
So let's take a look at this market, shall we?
I mean, you know, there's a lot to like about this market. However. And I'm always a glass half full type of individual.
You are.
However, there's still a lot of risks to the market here at the market top. We still don't really know what's happening with Brexit. We absolutely don't know what's happening with China.
It changes day by day.
It changes day by day.
I'm becoming a little bit more benignish about some of these headlines that are coming out.
So I think that's what the average investor is feeling like also, like, you know, just we're not going to pay attention to it and everything is just great. And things in the market are good. And you know what, Angie? This presents the absolute perfect time for an investor in the marketplace that wants to remain in the market to buy protection, to buy cheap insurance, right? We all, you know, call our insurance broker and we want to get better rates for auto insurance, homeowners, et cetera, et cetera. You're getting really great rates now, guys, to buy protection in the marketplace. The VIX is probably too cheap at this point here. Volatility overall is very, very cheap. So my recommendation is, you want to stay long in the market? Great. You know, I don't blame you. Just buy some cheap protection.
So how do you do that exactly? Break that down for a
Sure. You can do it a number of ways. You can just go into the marketplace and buy some put options in either the SPX or SPY, or if you want to break it down to some of the other indices like the NASDAQ or Russell, you can do that as well, because volatility is cheap. When volatility is cheap, that means it costs less to buy options, to buy premium, to buy that protection. Or you can go into the VIX. Now the VIX, with the volatility index, is known as the fear index, really works inversely to the market. So typically when the market's going up, volatility is coming down and the VIX comes down. So when the VIX is now trading in that 12 to 13 area like it is right now, that is very inexpensive. So someone that wanted to protect a position or protect a portfolio, you would go in and potentially buy some upside VIX calls.
Quick question on this one, McDonald's.
Yes.
Took a hit because of the CEO being fired.
Yeah.
Knee-jerk move? What do you do with this?
Yeah, I do think it's a knee-jerk move. You know, Mr. Easterbrook had been really good for the stock. You know, we're not talking about any sort of personal issues here. He had been really, really good for the stock. However, the company is not going to change what it has been doing just because they're going to have a different CEO in there. I do think this is a knee-jerk reaction. I think you're going to see 200 probably pretty quickly.
Ooh, okay. Thanks for coming on the show, Scott.
My pleasure.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.